Hey, so in this video, I'm going to show you how to use our holding company financial projection template. And there's kind of a number of different use cases that might make sense to use this template for. Maybe you have a holding company with a number of different franchise units that hold the individual units, and they're all in separate entities, and you're holding all of them in one holding company. Maybe you are doing a roll-up acquisition strategy where you're rolling up, kind of doing horizontal integration, rolling up multiple of the same types of businesses in your industry across different geographies. Maybe you're doing vertical integration, so acquiring your suppliers or your distributors and kind of up and down your supply chain. Or, maybe you're just acquiring kind of a diverse set of businesses that you want to hold in one holding company, and you'd like to be able to model the holding company as a whole. What do the projections look like for the holding company as a whole? So that's what this template is going to be able to help you visualize and see and accomplish. So I want to walk you through how it works. First, just a little bit about me. I'm Adam Hoeksema. I'm the co-founder of Projection Hub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders. We have a number of different templates that we sell. Today, I'm particularly focused on this holding company template. I'm going to put a link in the description of the video below to the template so you can go and grab that and follow along as you're working through your model. And then, of course, if you have any questions about how to use it for your individual scenario, just reach out to us at support@projectionhub.com. Be happy to help you with that, or perhaps customize it for you if needed as well. Okay, so with that, I'm going to go ahead and dive into the model. Okay, so I'm starting on our at a glance tab here, and this is kind of the end of the process. So once you have created all your projections, entered in your assumptions, you'll see some different graphs and charts at a high level. You'll also see a 5-year cash flow summary, a 5-year income statement summary, 5-year balance sheet, and then the income statement, balance sheet, and cash flow statement all broken down by month for each of the 5 years. So you get the kind of annual summary plus the monthly detail if you need it. But in order to produce these reports, we have a little bit of work to do on the input side. So I'm going to go back to our input assumptions tab here and kind of walk you through this. So you can pick a start date. You can add investments, different rounds of investments. So the idea and the example here, I'm just going to pretend that we are horizontally integrating an industry. We're rolling up, I don't know, maybe dental offices. Let's say we're going to buy a bunch of small dental offices and roll them up into one large holding company. And so maybe you're putting in a round of investment as the equity portion to help acquire these companies. And you're probably going to be able to use debt financing to acquire some of them as well. Here's where you'd want to put in those different rounds of investment. You can put the month that round of investment would come in. Accounts receivable and payable terms here, initial inventory, these are not probably all that important for you. So we'll focus on some of the unique holding company aspects of the model. So in this first fixed asset bucket here, this is where you could put things that are like the holding company or like corporate office level fixed assets. So let's say you have a corporate office and you did some leasehold improvements, $75,000, and maybe bought $30,000 worth of furniture for the corporate office, right? You could put that in here. Now here's where we get into the details of the individual business units that you'd be acquiring. A lot of times this concept of a platform company, that first acquisition is kind of the platform that you would then use as your model to then go acquire additional companies and kind of integrate into the processes that the platform company is using. And so I'm calling this first company a platform company. It's just a single unit. And if we're kind of going with this dental office idea, perhaps, so we're saying, okay, one business unit, so one office, we purchased it, and we purchased it for $1 million, and we purchased it in month 1 of the model here. Now, this useful life and salvage cost of the assets, this kind of depends on whether if you are buying, when you're buying the business, if you're buying assets that are then going to be able to be depreciated, you might want to be able to depreciate it over 30 years, and you could put a salvage cost. So yeah, if you were buying just the assets of the business, you could depreciate the assets or amortize the sale price as well. And so that's kind of what these assumptions here are utilized for. Okay, so here is where you can put the loan amount that you use if you're using debt financing to acquire the business. So we're saying $800,000 of the $1 million purchase price is a loan. And we can put in the interest rate of 5% and the number of monthly payments. And now there's not a ton of detail or a ton of flexibility around the details of financing the acquisition. So there's not the ability to use like lots of different types of loans or different structures or seller's notes or different bits of equity. So this is kind of at a high level, right? If you want a more detailed template specifically to model out just a single acquisition, we do have an acquisition template. I can link to that in the description of the video as well. That would probably be better for specifically modeling an acquisition. This is really more to just get the consolidated, all the different units into one model so you can have a consolidated income statement, balance sheet, cash flow for the holding company. Okay, so that's how we'd enter in the details for acquiring the first company. Now, let's say we're gonna buy a second unit here for $350,000 in month 3, and then a third unit for $450,000 in month 9. And then you also have the ability to say, okay, let's say we buy a chain of dentist offices that already exists. So we're saying business units 4 through 10 here. So there's 7 more units here that we're gonna buy all at once. And we're gonna do that in month 13. Each of these acquisitions, you can have a loan amount and interest rate and terms on that. Okay, so that's how you're entering in your different acquisitions as you buy them. And then once we come over to the revenue, pipe those acquisitions into the model, and you'll see the number of businesses represented, and then the first month of revenue. So the idea here is that, what's the first month in the model where the revenue gets to count as your revenue. So like what I've done here is usually just added 1 month from the acquisition. So if the acquisition happened in month 3, then month 4 of the model is when we get to start seeing revenue. And it also pipes in the number of business units here. So you can see just 1 unit, 1 unit, 1 unit, and then 7 here and 10 for the last group here. And then it'll allow you to put in the average monthly revenue per business unit. So what you can see here, monthly revenue from all units, you'll notice that at $210,000 from this line item, it's taking the $30,000 in monthly revenue per unit times the 7 units to come up with that $210,000. So just keep that in mind. And then all of these expenses here are also on a per unit basis. So these things are going to be multiplied by 7 in this case. And so you can put in material and direct labor costs and other costs of goods sold on a per business unit basis. All right, so now let's look at our input other expenses tab here. And so what you have here is the ability to add in kind of operating expenses. You have a few different options. You can add an expense as a fixed dollar amount, meaning it's just this kind of the same every month. So it's just $1,000 for marketing every month, or a per business or per unit cost. So if you wanted to say, hey, when we acquired those 7 units, we're going to spend $1,000 in marketing per unit, you would select per unit, and the model will automatically apply, $1,000 worth of expense per unit for you going forward. And then the last kind of flexible piece here is you can say the expense should be a percentage of revenue. And so if we say, we want credit card processing fees to scale with revenue, so they're 1.5% of total revenue, can have that expense scale in that way. All right, now going over to our salary positions, I would tend to think, and I would probably, if it were me, I would probably use this section for like the corporate level, holding company level salary positions. I think what I would do is for all other labor costs, I would enter in the individual labor costs on the per unit basis. I think what I would do is on the input revenue tab here, I would put in all of the labor costs associated with that particular unit in this field, and then leave this section, the salary section, for kind of the holding company, the positions that are going to kind of span across all the different business units, and maybe providing, you might have one CFO that's providing CFO services for all the business units, right? And once we've done that, we are back where we started here, the at a glance tab. And again, there are kind of lots of different scenarios you might have that you might want to model. And so I would just mention again that we do have a CPA on staff, and we can customize these templates for your unique scenario. And so if you want to talk to us about that, reach out at support@projectionhub.com. And if you found this helpful, if you found the template helpful and the video helpful, it'd be great if you gave us a like and subscribe to our channel, as we're trying to help more businesses find out about our tools and trying to help more businesses launch and grow. So thank you. Bye.